Welcome to CurrencyCast. Can treasury management systems help treasurers effectively manage financial risks? What is the importance of having super accurate cash flow forecasts? And can Europe-based fintech companies successfully tackle the gigantic North American market? Welcome to CurrencyCast. My name is Agustin McKinley. I'm the senior financial writer at Kantox and your host. In this special episode, we have the pleasure to welcome the two Tonys, Antonio Berga, co-CEO and founder of Embat, and Antonio Rami, Chief Growth Officer and co-founder of Kantox. Now, this is an amazing story. Both were born in the same city. They went to the same school as children. They attended the same university. And they got their first job at the same company, namely Deloitte. If that wasn't enough, they went on to found successful companies in the treasury tech space. So a warm welcome to both of you, and thank you for joining us today in CurrencyCast. Let's get started by introducing yourselves to the audience. Tony, maybe you go first.
Sure. So, well, thanks very much for bringing me today. As you said, my name is Tony Berga, co-CEO of Embat. And as you rightly said, I was born in Mallorca 38 years ago already. And yeah, I think the only thing that I would say is, the only thing that I knew when I was a child was actually that I wanted to dedicate my life to finance. It took me a while actually to actually decide that I wanted to set up my own business, way more than Tony actually. But I think the only thing that I knew was actually this, that I wanted to dedicate my life to finance in any way of shape or shape, right? And yeah, before setting up the business, I was an executive director at JP Morgan. I spent there close to 11 years doing investment banking and corporate banking as well. And before that, as you said, working in Deloitte doing corporate finance. And before that, like many other things, but I think I'll pause here.
So I can skip the first part of the story because it's the same as Tony's. I worked for a couple of years at Deloitte, and in the consulting side, I didn't have my life as clear to be dedicated to finance as Tony. I found the consulting world, and then I figured it was going to be more exciting to start a business. There was little to lose in a sense, and that's how Kantox got started, much more with a consulting mindset, but in the space of finance where we felt there was something to be done, especially around the crisis of 2009. And that got us started with Kantox. We started to speak into companies, how they were doing their international business. There was a lot of talk about internationalization back in the days. And we figured how they were not managing FX really well. And we took a very consultative approach once again and thought about saying, well, why don't you want to deal with currencies when you are actually passing a problem to your value chain? You're either passing the problem to your clients because you only want to sell them in euros. We were based in Europe. Or you only want to buy in euros. And we figured how we say, look, the reasons are twofold. One is the huge cost that the banks were applying to do FX, but most importantly was FX risk management. And of course, we try to provide solutions around decreasing that cost of transactions. We still do to date, but where we really found the jackpot and where we spend most of the life of Kantox developing was solutions so corporates would understand better that corporate FX risk, and we could automate that process to turn it into competitive advantage. Now, the irony, Tony explained how he started working for a bank, is that we were bought by a bank and he's on the startup side of things. So who knows if I will then develop my career in banking while he does his startup. Time will tell. We'll be back hopefully someday to talk about it.
I mean, funny enough, we were discussing about it before. And I would also say that treasury management is actually niche. It's a product that actually not everyone requires. I think Tony disagrees with this, but I think it really depends as well on the complexity of the business or the size of the business. So you go after companies, I would say in the lower segment of companies, treasury is not so it would be, I would say, managing treasury would be a nice to have, while the higher you go, the more I would say, necessaries actually to manage treasury in a sort of professional way. So I would still claim that treasury management is actually quite niche, even though I completely agree that FX management is even more niche, right? Because it's, and I remember actually back in the days when I was setting up the business, I was ping-ponging a lot of ideas with Tony. And you told me from day one, naturally you will go up and up and up towards sort of the more sexy, I would say, segment of companies, specifically I think because of it, because of the needs of our customers. So the higher you go, obviously, the more visible is the fact that they require treasury management.
I think what we can agree on is that finance is probably the department with more sub-investment in tools compared to others in the corporate life, right? If you compare it to sales, they have always the last flashy technologies, or it's easier to invest in something that is or looks like closer to the core business, right? To invest in that in technology. That's why, I mean, it's also natural, but the ERP is going to be much more centric. But again, there is more tendency in corporates to invest into the newest technology for the salespeople than really to invest in it looks like a support function like it's finance. So that's why I believe we deal with...
Do you think is that, or is it because of the margin of error that you have in finance? Because I think it applies as well. So the trending topic now is AI. Mm-hmm. So AI, I mean, don't get me wrong, but you fuck it up in sales from an AI perspective because you took a tool, you fuck it up, nothing happens, right? But try to figure it out with AI in finance, right? Or you do a payment that is completely wrong just because of AI. So I think the adoption, I think it takes longer just because of it. Because
but there's a false sense of security by doing things manually, right? I have someone that I trust and is in there. Yeah. But if they're doing it with an Excel file and having to, check every single line, then you're going to lose a lot of attention to outliers. Yeah. So the likelihood of mistake is a lot higher.
Yeah, I fully agree with that.
Well, I think NOR, as we call it in Kantox, our currency risk management solution, it's for sure not a system where you concentrate a single source of truth, right? Or where you store the data. I think NOR, the TMS is the case, right? Yeah. They are additional solutions to be a best of breed for an activity. I was talking about the sub-investment in the finance area. Both the TMS work or the currency management job, if there is not a tool already there, is because there's an Excel file doing it on the side. That's because the current system is not doing it. But when we come in, both the TMS or the currency management system, we connect to existing sources of information, right? Yeah. We both connect to the ERPs, we sometimes also connect to the TMS if there is one. So I think there is where the complementary comes, and is also proof that ERPs many times are not enough, right? Or again, whenever you see an Excel file, it's because you're saying something that is not working as it should.
Yeah, I fully agree with that, and I think back to one of the claims that we have is actually that you are an API native solution. The ability for us to be connected to every single different platform that the client is using is actually super powerful. As you rightly said, you may have like databases that might sit in the ERP, that you get a lot of data coming from the ERP, but then what you might require as a company is actually taking the best solution for a specific use case that you require. Right? Might be, let's call it like TMS, let's call it Kantox as well as an FX management solution. But I think more and more the emergence of APIs as well allow for it. Right? The fact that there's sort of quote unquote easy to implement, and then you cherry pick whatever is best in every single vertical.
Yeah, I would say before IT systems were much more rigid and there was a lot less interoperability. Now with the rise of APIs and I would say increased talent in all corporates of IT, it allows them to say, oh, it's easy to connect this to that with a standard API technology, right? And then these teams, many times, I'm sure for you is the same as us, they don't require a third party to be integrating our systems, right? That is because there is already existing IT talent, which says, look, I understand these APIs, I can make that connection, that's going to take me 6-8 weeks to get it live.
Yeah. I think it goes back again to what we were discussing before on building a business case. So justifying to the customer that building or implementing Kantox, implementing Embat, at some point makes sense for a sort of return on investment perspective. So it's not just about like navigating Excel files, but rather deciding at some point whether the pain that they suffer justifies actually the investment of taking something that is actually complementary to the ERP. how does this work? Yours? So the Kantox one, just for me to understand.
So I would say it's a recent launch, but it's actually, I would say, quite a rollout project already. It's been, time goes fast. But from that perspective, what we try to say is we see a lot of FX exposure hidden in subsidiaries, whether it's because these subsidiaries are buying from third-party suppliers or third-party clients and there is cross FX, or sometimes it's merely the intercompany activity that is creating the exposure on the subsidiary side.
Yeah.
Well, regardless of the setup, as a central treasury or as a group treasurer, our firm belief is that the central treasury should have visibility on what is the exposure and how it's impacting them. I always tell treasurers, it's like, look, it doesn't matter whether you hedge or you don't hedge. You, as a group treasurer, you always need to identify and measure. Right? It's fine to have a policy of not hedging, but you need to always measure what is the potential impact and what is the impact you've had in the past. So what we developed was the possibility to roll out Kantox, for example, in all the subsidiaries, create visibility towards the central treasury to understand these impacts and measure these impacts, and then if they want, be able to set up rules where these subsidiaries are requesting hedges with commonly agreed or actually imposed FX policies. Yeah. And then these executions happen instead of with the local banks where you typically have worse prices and worse spreads, then they would be done against the central treasury that would concentrate the exposure and then trade centrally with the banks.
That's actually super cool. And it reminds me of actually our model that is called in-house banking. So basically what we do is, I don't know if you're familiar with this concept of in-house banking, which is effectively taking one of the legal entities among the group, and then that company sort of playing the role of being the bank of the whole group. So basically the one that is sort of liaising with banks, getting all the credit exposure, getting all the sort of loans, overdraft facilities, whatever that is, they take it actually at consolidated level, and then they are the one sort of deciding as to how to finance the whole.
It's logical because in the end, in these subsidiaries, you typically have less talent, to say it in a perspective, like smaller organization that have to deal with more things. Yeah. And there is also economies of scale from dealing with this centrally. So if you're able to get that visibility, we come back to tools, to automated processes that can help drive the business. And then for sure there is natural efficiencies that are generated there. I'm sure for you, maybe one subsidiary is long in cash and the other is short in cash. Yeah. And by implementing a system like yours, you're able to not need cash external financing.
Yeah, indeed. Yeah. And what's the trend based on your experience in terms of centralization and decentralization? I think more and more, at least ourselves, what we see more is centralizing the whole finance function. So basically having someone, like let's say headquartered in Spain, having the whole sort of team as well sitting in Spain and overseeing the whole of the organization out of the headquarters, and then as we said before as well, sort of being the corporate hub in terms of FX, in terms of treasury.
I think sometimes these are trends, right, of centralization, decentralization. I would say the important thing here is the communication. Because there is undoubtedly a lot of local knowledge in these subsidiaries and particularities about that business. And what the centralization should not mean is complete, still on functions or trying to manage everyone the same way. Because different countries, sometimes you have even different business lines work differently. The implementations of different types of tools, right, from TMS to REP, I think need to facilitate the dialogue. If we talk about FX risk management, say, look, if we both see the same thing, if we both see the same exposures, then it's easier to have a call and say, what do you think is the best way to manage? Well, we think it's this way or that way. In the end, of course, central criteria tends to lead, right? That's what we can call the centralization. But that shouldn't prevent that dialogue to happen. Say, okay, we're going to set up the rules like this because this way we adequate more to your particularities. And then it's fine, as long as there's communication, the local entity doesn't feel left out because they are still going to play a key role in the definition of those rules and how it needs to work.
Yeah, makes sense.
Well, I'm sure you have a lot of talks regarding authorizations and powers also for payments. I mean, not even to execute an FX transaction, but actually to send a 100 million payment. Yeah. Who is authorized to approve this and how critical sometimes is to making those payments, right? Again, we go back to basics of user controls, user permissions, audit trail, lock. And back to my earlier point, if there is communication, well, maybe that trade, I don't know exactly the case, but maybe it wasn't authorized, but it was right to take it, right? So Was there a right information system where both centrally and the local entity were looking at the same thing? Did they have common agreement of how the FX transaction should happen at that company? Because when they were, if they were, which I don't know the specifics, but if they were managing separate Excel files with different underlying data, that is when conflict is going to be created. I'm sure it's very similar in payments.
Yeah, it applies the same, I would say the same rationale behind, right? So the fact that, at least in our case, we see more and more as well, as you rightly said, what we call it like 4I policy, so making sure that irrespective of who's orchestrated the payment, you always have like someone else reviewing or at least overseeing what is happening. And we see more and more like a lot of corporates as well moving towards centralizing all the approval process, not only the ERP, but rather as well in the TMS or potentially in Kantox, either for FX trades. But I think it's, as you already say, I think it's a common trend among across the industry. From my side, what I can say, I fully agree. I couldn't agree more. That is a trending topic, cash flow forecasting. I think to me the issue is one that every single business is different, and one thing is, by the way, cash flow forecasting for the short term, and also is financial planning. So at least from a TMS perspective, the way we think of cash flow forecasting is for the short term. So making sure that we give you the tools, the visibility for you to make your own decisions for the, let's say, the 30, 60, 90 days forward. And then I think completely different topic is financial planning. So where do we plan to land in 3-5 years down the road? I think the issue we have, at least, and as well from a product perspective, my opinion is every single business is different, and they want to build it in a way that differs one case from the other every single day. I'm like thinking, just giving just one example. One of our customers is Cabify. So how can you actually forecast? So the question is not about cash flow forecasting. It's actually demand forecasting. How do they plan to actually build on a daily basis? How much or how many people they're going to take cabs of themselves? So it's super tricky to actually build the short term for a business specifically. And then you talk about B2B, then the visibility is completely different, because maybe 80% of the data you have it already in the ERP because of the terms and conditions that they have with their customers, right? But you think of B2B, B2C, it differs a lot from one business to another. So that's why to us, it's always an ask of our customers. Question is, and this is one of the questions that I put to all of our customers is, do you have the data anywhere, or is it going to be just in your head as to how much you're going to be making in the next 30 days? But if you don't have it in the ERP, you don't have it in Excel files, so for us, or either we do magic, or it's super difficult for us to actually help them build cash flow forecasting. I don't know if that's what you...
No, I'm going to steal your wording there on the cash flow forecasting and the financial planning. I really like that concept, August. Maybe we need to use it a bit. When we bring it to the world of currencies, is one of the things that create instability both in the cash flow forecasting and in the financial planning is actually when there are cross-currency operations, right? Because if you want to do cash flow forecasting to calculate what is you're a euro-based company and you need to calculate your levels of debt that you need in euros, well, if you have revenues in foreign currencies, then that is going to be naturally destabilized. Even if you have good cash flow forecasting, you're saying, oh, I'm going to receive these many dollars and these many Mexican pesos. But actually, if you need to bring that liquidity back to euros, that is going to be an unstable flow of euros when it's denominated in foreign currency. That is the importance of having an FX risk management policy to actually reduce that volatility and make that cash flow, short-term cash flow certainty more accurate. And the same applies to the long term. But one of the things that why Agus says I'm out of consensus is, and perhaps is the wording there is, the financial planning accuracy of how much your flows are going to be in foreign currencies that you will need to convert back to euros, just for my example, maybe you don't need it to be that accurate.
Yeah.
Because maybe what you need to do is to create certain level of stability. Instead of having 100% of the exposure and see, well, where is going to be the rate, when these cash flows, when time goes by and these cash flows materialize. Maybe you want to start to reduce some of that volatility by taking partial hedges, for example, right? That always depends, as I fully agree with you, that depends on the underlying business model, how they build pricing, etc., etc. And I'll give the example of Cabify. But my point is, there you don't need a 100% accuracy if what you're doing is hedging 20%. Yeah. Well, as long as that flow is not 80% wrong, you are, let's say, on the safe side. And just because I picked on the example and they are not yet a customer of ours, maybe they hear us, but you talked about the demand forecasting. When I travel to the US or to Mexico and I order my Cabify, I am still angry saying, look, why I have a card in euros, right? A business card in euros. Why do they insist on charging me in Mexican pesos because I'm taking a car in Mexico? Well, actually, for me, it would be as a customer a better experience to see the fare in euros and pay in euros. But actually, what will be damaging for them, it's a guess, I don't know that exactly, but it's the cash flow forecasting. Because suddenly they have incomes in one currency and they have payables in another. And go back to the short-term cash flow, they're going to have that FX risk, that instability, and maybe if they don't manage that exposure, the day they need to pay the drivers, they find they don't have enough euros.
Yeah.
So again, that is hopefully a nice way to tie in the importance of the short-term cash forecasting tied with FX risk management and how to make it a complete cycle, have very accurate short-term, and also reduce uncertainty on the financial planning.
Yeah. I couldn't agree more, actually. But in the issue that we have, because you were speaking about certain percentage of coverage. In our case, what they want is, or what they look for is actually accuracy at the last euro.
But that means
specifically in the short term.
Bringing it back to the FX territory, that means higher hedge ratios, maybe 100% on the cash flow, short-term cash flow.
Yeah.
Right? But lower ratios on the future, which can be completely linked to the way they do pricing, for example. Yeah. And that is something that, of course, we try to support and we try to adapt, we try to understand every model. And again, always revert back the results of the FX risk management activities to the TMS, so the TMS can do the cash flow planning. Yeah. Accurate to the cent.
Yeah. But I guess back to your point then, you require to have customers that they care for the long run, actually. So if not, so if they have no single visibility whatsoever in terms of how much money they're going to make in dollars, then for you there's no play at all, right?
Well, look how you say, look, we try to remove uncertainty. When we talk about normally TMSs, we retrieve a lot of the balance sheet exposure, what is very certain, right? Normally, and I know you do, for example, some customers say, look, I have a very strong signal of cash is going to be needed because I put a purchase order. I still don't have the accounts payable, right? But maybe I am 80% certain that a cash flow is going to happen.
Yeah. So and then you might cover a certain percentage of that.
So maybe you want to say, look, I want to hedge 80% of my purchase orders, and then when the accounts payable come, I want to move from 80 to 100%.
Yeah.
And that's exactly the type of things we provide, and we, again, increase and create better visibility on those financial plannings in that case.
Yeah, makes sense. I always say that companies go bust if they don't manage the cash well, but they can fuck it up doing accounting. But nothing would happen, right? But if you fuck it up with managing cash, then you can go bust, right? But I think every single piece of data that you have, might be P&L, might be balance sheet, might be cash flow, it gives you certain data as to how you manage your business, right? So cash, obviously, I think is bottom line eventually and tells you how healthy your business is. But I think if you look at P&L, EBITDA, I'm actually quite supportive of EBITDA myself. So if you look at different lines of a P&L, it gives you a lot of data as to how to manage your business. So you might be burning cash because you are not good at managing, for example, contribution margin. So I think for me, obviously everything comes down to cash or to balance sheet exposure, but you need to go into the details of every single, I think, in my opinion, every single P&L item for you to really understand how your business is operating, right? But eventually, obviously, and given that we are cash flow managers, obviously, we always claim that cash is king and cash is super important to run the business. But I think along the lines, like P&L, balance sheet, cash flow, give you a lot of data.
I mean, if I read you well, what you're saying is saying, look, you need to have a healthy business, and then maybe you can be short of cash because you're investing, right? But in the end, the fundamental economics of that company needs to work. They need to have more revenue than cost. And yeah, we can go through a phase where we are investing into the business and we are finding different ways of financing that growth, right? But the fundamentals need to be right. One of my criticism, that's why you have me on the record on that, is because sometimes when companies especially grow, they become more silent. And then the Treasury department gets their goal of saying, look, we don't want FX gains and losses. when FX gains and losses is a pure accounting result, as EBITDA can be sometimes. Look, we want to maximize EBITDA. Well, that's fantastic, but then if the cash is not there, it means something bad is going on with the business. And a healthy business, a good business, is one that works well from first principles. Then we will need to find the right balance of financing and management of the cash cycle. But my point is, I think all businesses deserve an explanation to the shareholders of saying, look, that is how FX risk impacts us, right? This is how we change our pricing based on FX risk movements. And some businesses can do it more than others.
Yeah.
That is my point on understanding the underlying dynamics and setting the right measurement. I go back to my point of measuring exposures. And then those stakeholders will decide we are comfortable with this level of risk or we want to reduce it, and that will derive into an FX risk management policy. But if the only goal is to say, look, we want the accounting metric to be nice, well, I don't forecast a great future for that company.
What I would say is that, as you rightly said, Treasury is becoming more strategic, and same as I think the finance team as a whole. We always talk about the CFO actually, or the Treasurer becoming sort of the chief value officer in a way that is sort of, I would say, transversal across the whole organization, sort of impacting every single business decision. And I think technology, and I think thanks to Kantox, thanks to our business, thanks to many others as well doing technology in this space, I think is helping as well to put Treasury at the core of the company. So I think many years ago, you think of a treasurer, you would think of someone like Gray, right? If someone that no one wanted to take actually the role of a treasurer or someone like dealing with FX, but more and more, because I think technology enables, like obviously having like a better role, a better day-to-day, having insights, having real-time information. I think all of it is sort of creating a sexy, I'll say, role now. Treasury, and it's giving you like the data and the insights to actually be impactful in the business. But I would say many years ago, because of lack of data, because of lack of real-time data, because of lacking access to data, you would be in a silo, right? Like just sort of making your own like collections, payouts, but you will be just sort of, in a completely isolated area. Super function, yeah. But you wouldn't be at all strategic back in the days.
Exactly. I think in the end, you said how you became in love early in your days with finance, right? And I've learned it later in my career, but it just gives you such a privileged way of dissecting a business, of understanding a business. I felt I've always liked different types of businesses and understanding how they were run. And I think the financial side of things is what has given me this toolkit of very quickly understanding where the key points, where the bottlenecks are, and so on and so forth. And exactly what you say, for me, considering treasury and finance sometimes, even to that extent, and more of a support function, is what is being changed by the investment on tools, right? I was saying, look, now I have more time to assess and take decision based on this data, rather than to actually needing to spend time doing the tool and making sure it's completely right every step of the way. And for example, if I bring it to my terrain of FX, one of the biggest complaints, aside of the lack of visibility, you will see it on the reports, is lack of understanding by management. Well, I think that's a lame excuse, to be honest. It is the role of the treasurer to educate that management and to say, look, I have been sitting down with commercial team, and that sometimes is like you're calling a beast or something like this. It's like, yes, finance needs to sit with commercial. They need to be friends. They need to go for lunch together. It sounds silly, but in many companies it doesn't happen. And maybe the CFO does, but not the treasurer. And I think going down from their Babel Tower, as Francois Mascalier calls it, it's super useful, and is what once again all these technologies are allowing, right? To transform the function to be much more closer to the core. I always give an example of saying, look, we have a lot of treasurers who go to their purchase department and say, look, have you asked the price of this product from this supplier in euros and dollars? Have you compared it? Sometimes we find amazing differences, like 7% difference in a price for the same product from the same supplier in just two different currencies. Imagine the value the treasurer can unlock if they say, look, now we are able to manage exposure well. I'm going to tell my purchase department not to buy in euros because that was not giving me an exposure, but actually go for the cheapest currency. So it's just a simple thing, but it's a complete unlock of value.
Yeah.
And how the treasurer can be joining that more strategic table that they were not.
And do you think this depends on the size of the business? So I guess obviously the more complexity, the more makes sense to actually build processes, sort of build internal processes to actually realize this value.
My experience is the bigger the company, the more people there is in this finance department, right?
Yeah.
So when you go to smaller companies, maybe you have between 2 or 3 people that do everything. So it's a bit easier to be closer to the strategic part. And I think it shouldn't happen that because you become bigger, you are not sitting there. It doesn't matter the level you are. You should always be understanding where is the direction of the company, what is the interest of the company, and this is going to help professionals also grow in their career if they have that approach. The US is a huge market. There was always the doubt, the US only understands about US dollars, and we've seen the hard way, or maybe we had some missed opportunity in some years that we didn't pay the necessary attention. It's a huge market. We are seeing companies like very adamant to be managing those foreign exchange risks. From a timing perspective, of course, as you say, Agus, the strength of the dollar is helping them realize how important managing not only the balance sheet exposure, but also the financial planning and the upcoming years is going to be very key. So we are happy with that entering into a huge market, looking forward to visit a lot of companies and treasurers. And I must also highlight the hiring we did from Andrew Gage, who has a tremendous experience on the FX risk management world. And we're very much looking forward to continue our journey there, also jointly with BNP, who is a fantastic partner onto our development there. Just one last comment on the corporates and how important that is. We are seeing how I think these headwinds that you were mentioning are not only, again, from the balance sheet perspective of their earning per share in the current presenting of the results, but is also on saying, look, how is my demand going to be affected on the upcoming years with that dollar strength, right? So having a FX risk management policy that is looking at the financial planning at the upcoming years, we believe is also going to be more and more critical, and we are more than happy to have these discussions with them.
Cool. I mean, on our case, as you guys said, we just acquired this business called Necto. Funny enough, I was telling Tony that we acquired the business, but effectively we acquired the technology. So basically, it's just a sort of anecdote that this company is based in the US. They also had like presence in Singapore through a few employees, but effectively we acquired the business, the technology per se. So we didn't acquire actually presence for Embat in the US. So and for us feels like a very, I would say, big decision that it will come hopefully at some point like farther down the road. I don't think it's anytime soon that we're going to tackle the US market. I think, as you rightly said, you really need to go, or my perception, I think you really need to go with, I wouldn't call it deep pockets, but I think you really need to go with enough muscle to actually navigate that massive market, right? So the US is not like coming to Spain. It's like literally it's like the whole of Europe, right? So I think at the same time it's good. Back in my days at JP Morgan, we were always debating internally as to, like a random American guy would come to Spain and I would be like, guys, let's launch the business in Europe. And we will be always like saying, guys, this is not like the US that you put like someone random in Michigan and you cover the whole of the US. So covering Europe is actually quite challenging as opposed to the US, right? That you really need to put like some people on the ground in Spain, Italy, France, Germany. You really need to get to know the culture, right? And I think back again to the topic, the US, I think it's a massive opportunity, but as we discussed before, it's a massive market. So I think it's costly, so it's expensive. It's a bold move. So whenever you want to do it, you really need to do it with enough muscle to actually really go all in if you want to do it. No. So yeah, I mean, time will say. But for now, I think we have more than enough covering the whole of Europe.
We'll try to pass you our best advice on this adventure. We have a strong partner, as I said, with BNP to do that deployment, but yeah, fully agree with you. But at the same time, very excited because we are seeing a very dynamic ecosystem of companies with fast decision makers and people that if they see a problem and you can hand a solution, they are very dynamic, and that is to be very appreciated for companies like ours.
And I guess by nature, I mean, the US, all of the companies are very global, right? So I mean, from an FX perspective, I guess makes total sense, right? So I mean, obviously they manage across the whole of the US, the USD, but I guess anytime they need to go somewhere else, obviously they require FX, right? So
I'll let you know in the next episode.
Cool. Pick up again this topic that you mentioned on generalist, because we always discuss with customers on this topic specifically, because everyone speaks, and I think Treasury as a whole now became sort of a sexy topic, right? Like I think across all the companies, back again to the point that you made, Agus, on cash is king. But I think Treasury, like everyone speaks about Treasury, but Treasury is like actually a quite broad concept, right? So Treasury, at least for us, we do banking connectivity. And this falls within Treasury, but there might be like customers just looking for cash position. And this is literally Treasury, right? But orchestrating payments is Treasury at the same time, right? Or you want to have cash flow forecasting, falls within Treasury again, within the umbrella of Treasury, but again, it's like a very niche, a specific topic, right? Like cash flow forecasting, financial planning, execution of payments, FX. But I think maybe my point is very generalist, but eventually, every single customer is different, and every one of them, they require like something specifically within Treasury. So everyone talks about Treasury, but they might be just looking for FX management or FX optimization, or some other might be looking just for actually connecting banks and getting cash position real time. So I would only add this again because because we always discuss, Tony and myself, about this concept of being niche or not, but yeah, I think it's
On my side, I guess I'll touch into a similar topic, but my point is, we see a lot of policies, procedures, ways of doing things that have been designed from the perspective of the resources the company has at the moment, and those resources being people and Excel files, right? I would task those treasurers to employ a little bit of their time on thinking, well, think big. Think if you would have all the resources of the world, what would be the ideal process to do these tasks, right? Any of the ones you mentioned, from payments to FX risk management to liquidity planning, whatever it is, right? And then there is a lot of untapped opportunity in the space of Treasury. That's, I believe, why the space is sexy. On saying, well, is there any, it's not the tool for the sake of the tool, right? But is automation, is digitalization of this process enabling me to be doing more with the same resources, right? And that is the key or the twist that hasn't been there for so many years in Treasury, because I think digitalization has had a faster path in other places of the corporate, and it's the time of Treasury. It's time for the treasurers to be the protagonists and become that strategic treasurer we were talking about.
Yeah.